Elon Musk is reportedly preparing an initial public offering for SpaceX with a target valuation of $1.75 trillion. To see what that looks like in context, this chart compares that valuation against the combined market caps of Coca-Cola, McDonald's, Disney, Nike, and Starbucks, plus the top 10 companies on the London Stock Exchange. While hedge funds usually dominate these listings, the biggest buyer of this stock will likely be your own 401k or retirement account, and it will happen regardless of whether you choose to participate. The mechanic of passive investing is built to automatically buy into major indexes. That convenience comes with a hidden catch. It can force everyday investors to buy into a company regardless of its underlying financial logic. Public perception often frames SpaceX as a singular rocket company, but the entity heading toward the market is actually three distinct businesses stacked on top of each other. The first is the crown jewel, Starlink. It's the fastest-scaling telecom provider in history, reaching 10 million subscribers and generating $11.4 billion in revenue last year. Its profit margins have expanded from 41% to 63% in just 2 years. Then there is the rocket division, which handles satellite launches and NASA missions. While it is a successful logistics business, it generates roughly $4 billion annually, about a quarter of the total revenue. Combined, the satellite and rocket divisions brought in roughly $8 billion in profit last year. It is a solid performance, but a $1.75 trillion valuation requires significantly more than $8 billion in earnings to make financial sense. This brings us to xAI. Earlier this year, SpaceX acquired the AI lab in an all-stock deal that valued the entity at $250 billion, essentially moving the asset from one of Elon Musk's companies to another. At the time of the deal, xAI was burning over $1 billion a month. All 11 of its original co-founders had left the company, and the CEO admitted the entire platform needed to be rebuilt from scratch. When consolidated, the $8 billion in profit from Starlink and the rocket division gets wiped out by xAI's deficit, leaving the total company with a $5 billion net loss on $18.5 billion in revenue. Investors believe they are buying into a profitable machine, but the consolidated math shows a company losing billions of dollars a year. Finding enough buyers to maintain the price of an unprofitable company at a record valuation is a massive logistical challenge. The Nasdaq exchange provided the solution. In May, they adopted 3 new, highly specific rules that accommodated the exact configuration SpaceX intends to use for its listing. The first change, the fast entry rule, cuts the standard 3-month waiting period for price discovery. Now, a company can be added to the major index in just 15 trading days. Second, they've removed the requirement that 10% of a company's shares must be available for the public to buy. This allows SpaceX to list with a tiny public float of just 4 to 5%. Finally, a hidden multiplier was introduced for companies with small floats. Passive ETFs are now legally required to treat that tiny fraction of available shares as if it were 3 times larger than it actually is. This combination creates manufactured demand. It legally requires index funds to aggressively buy the stock, supporting the valuation regardless of what the market actually thinks the company is worth. The initial phase of the offering involves dumping 30% of the supply onto retail buyers. While insiders hold their low-cost shares, the public is invited in first. 15 trading days later, the fast entry rule kicks in. This forces passive index funds to buy up the remaining available shares at the peak valuation created by the initial retail demand. This process effectively turns the public into exit liquidity. It allows insiders to offload overvalued shares into the safety of millions of individual retirement portfolios. The automated nature of passive investing, sold as a way to avoid Wall Street's traps, is the very mechanism being used to make the public a guaranteed buyer for these assets. To understand the hidden mechanics moving your money behind the headlines, hit subscribe. We'll keep looking at the data they'd rather you ignore.